Welcome to Prime Life. We call it Retirement 2.0. Leave each episode with tips and new ideas to help you navigate retirement in our new age. It's your time. Make it count.
This podcast is for educational purposes only. It is not intended as medical, investment, or financial advice. We do not sponsor or endorse any of the individuals, companies, products, or services featured on this podcast. Any statements or opinions expressed are of the individual who makes them. We hope you enjoy the episode.
Hi, and welcome to another episode of the Prime Life podcast. I'm here with my co-host, Joseph. Joseph, how are you today?
Mary, I am great. Getting to the end of the year, so excited for what's ahead.
Absolutely, I agree. And so this episode in particular will be in the new year, and I'm super excited about that. Plus, we have an amazing guest that I've gotten to know a little bit, and I'm hoping to get to know more. And I'm excited for you, Joseph, to introduce him.
Well, thank you very much. With over 16 years in the banking industry as a VP, Stephen helps individuals, families, and small businesses reach their financial goals. Stephen, welcome to the show. Please tell everyone a little bit about yourself.
Yes, and Mary Joseph, thanks for having me. Again, my name is Stephen Taylor. I am a vice president and banker with a local community bank here in Connecticut. And as Joseph mentioned, my job and my role and what I'm passionate about is really helping individuals, families, and small businesses reach their financial goals. And I look forward to presenting some high-level ideas and ways to prepare for retirement today.
Well, that's great because this is perfect for our audience. So, Stephen, tell us a little bit about some of those topics that you present to individuals and or families when they start entering the pre-retirement journey or
Yes,
retirement journey, either one.
Yep, and I'll get into specifics, a bit down the line. But a lot of the things I talk about is really financial security and just remembering the fact that savings matters. So starting to save if you haven't already, knowing your retirement needs. You know, if you're working, obviously contributing to your employer's retirement savings plan, and really just learning about other retirement tools and plans that you can start to prepare for now if you haven't already, and really just considering basic investment principles.
So savings is not the easiest thing for some people to do. I personally love squirreling away every single thing I can, for that rainy day or future, use. What advice or suggestions do you have for people that to actually start saving?
Well, I will say saving is a rewarding habit. I know it works. One of the many things that's worked best for me and colleagues and my clients is really just out of sight, out of mind. So having an account, whether it's a retirement account or not, is not associating, any debit cards with it, for example. Obviously, you want to monitor the account to prevent fraud and just to make sure that, things are accurate as it relates to your history of that account. But, just going back to out of sight, out of mind, if you're not thinking about it and, you're having funds distributed into those certain accounts, it's happening and you're still continuing to live your day-to-day life and not thinking about it, but, you're saving at the same time.
I would love you to go down the path of the future because I think many of us can underestimate things like medical expenses or unexpected costs in our lives. And so how do you approach that with individuals?
Well, I think every individual is different, of course. So it's really talking about what type of bills they have, how they live their day to day lives, family members. So, for example, at the certain age you may be at, you may be taking care of a parent, or you may have kids of your own who you're preparing for, whether it's college, whether it's planning for their future as well. So it's really having that roadmap of how you're currently spending money, what your plans are, whether it's kids or parents or other family members, and making sure that what you're doing is justified to continue to still prepare you for retirement.
So I personally worked for a insurance related business, and we used to talk about how health insurance is going to be our largest expense in retirement. So kind of tying to some of this conversation so far, what advice, suggestions do you have for people to prepare for that expense, right? Like you can't just wake up one morning and hope to have all that covered. Kind of ties to the savings, but maybe there's some
Yeah,
other.
definitely ties to the savings. But if you're already saving, whether it's for retirement or even another goal, keep going. That savings is, again, as I mentioned, a rewarding habit. So if you're not saving, it's really time to get started. It's never too late. So start small if you have to, and try to increase that amount you save each month. The sooner you start saving, the more time your money has to grow. So making sure that it's in the proper accounts where if it's interest bearing, again, that money will continue to grow. But make savings for retirement a priority. Devise a plan, stick to it, and set goals. Because again, it's never too early or too late to start saving.
That's so true. And it's easy sometimes, especially I remember I have two grown adults. And so when they went to college, they kind of didn't come back. And they're, knock on wood, I say, they have jobs and they've been responsible, to a large degree. We helped them fund their education, and we did everything we could. They did have a few loans because we didn't want to say, but my husband and I educated ourselves, and it was really hard, almost too hard, I would say out loud. So, here I am, and I'll just talk about myself for a minute. And again, maybe perhaps many of our listeners, my husband and I have a mantra. We're going to work as long as we can until the organizations we work for kick us out. And we literally say that. And, it's within jest, but it's true.
You just said that on recording.
I know. So I would like for you to talk a little bit about, because I believe it's one of the points that you've wanted us to bring about, which is retiring too soon. So talk a little bit about that.
Sure. So I'll give you a personal example. My dad retired when he was 44 years old from the state of Connecticut. But after he retired, he still continued to work. Whereas I'm not retiring at 44. I'm 44 years old now. And I don't see myself retiring, believe it or not, for at least another 15, 20 years. And that'd be great. So again, just really going back to, how every situation is different, where I think I was 12 years old when my dad retired, and he still had to take into consideration it's myself and two other siblings, college, and just how he's going to plan, you know, based on his life expectancy. He's in his mid 70s now, so he's been retired over 30 years, but he structured his pension and his retirement savings accordingly to where he was able to plan for us school wise, college wise, and still continue to, maintain his livelihood, throughout, again, the 30 plus years he's been retired. So I say that to say this, where I'm still working. I'm not retiring anytime soon, but I have a 17-year-old and a 14-year-old where, again, I still need to start planning for things, but my situation is a little bit different than his just because I'm still working in my main career, whereas he was kind of doing odd jobs to stay busy because he was retired from his main career. So, again, every situation is different, but it's really important to consider basic investment principles regardless of your situation. So how you save can be as important as how much you spend. So inflation and the type of investments you make play important roles in how much you'll have saved in retirement. So again, every situation is different. Know how your savings or retirement plan is invested, most importantly, and learn about your plan's investment options. And I think most importantly, it's asking questions. So having that advisor that you can go to, making sure that they understand your roadmap and your goals, and they're the professionals, making sure that you have that trusted professional to guide you in the right direction.
We did an episode not too long ago, Mary, about choosing the right plan. I think I forgot what we called it, but we were talking about the age-based plans,
Hmm.
the predefined. So
We
yeah,
did. We did. We also talked a little bit about, not to cut you off, those individuals when they're thinking about their financial planner, like selecting someone that really understands your vision and someone that you know, like, and trust, so that when you're sharing with them your most intimate details of your financial roadmap, as you called it, that you feel comfortable with what they're suggesting. Ultimately, like you keep saying, Stephen, it's all individualized and it really depends
Yep.
on what someone wants. And you brought up something earlier, which I really appreciated, about those of us that have to help our parents, which, that's real for many people. And
Yep.
so being able to balance that, but also taking care of ourselves. And I say that in the nicest way I can in terms of our retirement and looking at all of the expenses so that we really don't forget to see the whole picture.
And I will say, retirement is expensive. Experts, I'm approximating, but estimating that you'll need 70 to 90% of your pre-retirement income to maintain your standard of living when you stop working. So that's why it's really important to really just take charge of your financial future. Because bottom line is, the key to a secure retirement is to plan ahead.
so excuse me, where I was going a minute ago was to talk a little bit about this assumption many people make that the government's going to provide, right? So you get Social Security if you've paid into that system. Talk a little bit about what that actually means and how realistic it is to rely on that as a retirement plan.
And we'll get that answer after a brief word from our commercial sponsors.
Nassau is always working harder to be your carrier of choice. We offer insurance products that can help you meet your retirement goals, such as protecting your savings, securing lifetime income, or paying for healthcare costs. We're dedicated to providing best-in-class service and are keeping things simple, and we'll have your back. We have around 400,000 policyholders and contract holders and have been doing this for a long time, 170 years, but we remain humble enough to always try to improve. For more information, visit nfg.com. Nassau insurance products are issued by Nassau Life and Annuity Company of Hartford, Connecticut, Nassau Life Insurance Company, East Greenbush, New York, or Nassau Life Insurance Company of Kansas, Overland Park, Kansas. Subsidiaries of Nassau Financial Group. Products are not available in all areas. Policyholder counts are for all Nassau companies as of September 30th, 2022, and are subject to change.
Great question. It's definitely important to do your due diligence and find out about your Social Security benefits specifically. On average, I want to say Social Security retirement benefits replace maybe 40% of pre-retirement income for retirement beneficiaries. So the amount of your wages that Social Security retirement benefit replace varies depending on your earnings and the age you choose to start receiving benefits. So you may be able to estimate your benefit by using, you can go online. I believe they have, retirement estimators and things like that. And I believe you can go to the Social Security Administration website for that. But I definitely recommend checking that out, just because, again, it really only replaces 40% of pre-retirement income.
Yeah. Stephen, I'm going to take us down a slightly different path because I do know you've been in the community, you like you said, Connecticut, Hartford. The bank that you work for, Liberty Bank, you do a lot of great work. You help businesses, individuals, and whatnot. And I've always been very impressed with that. Talk a little bit about that perspective of the community that you yourself and the bank that you work for, your ethos.
Yeah, I love what I do for that main reason is Liberty Bank really encourages me to be out in the community, whether it's community service, whether it's, financial literacy, whatever the case may be. And I was blessed enough when I was growing up to, have my parents and just other adults and mentors throughout my life give back and contribute to the communities. I was lucky enough to kind of see it firsthand and be around it. And that's really what motivated me as a young kid is watching mentors and adults, again, give back to the community. So the fact that Liberty Bank encourages that and I'm passionate about it just really, really ensures me that I'm in the right role and in the right company.
No, I love that. Can you also share a little bit about um, what you find that you hear from the community that they ask you and your company in terms of, like you mentioned, financial literacy, which I love. So can you talk a little bit about, again, what individuals in the community really ask in terms of wanting to learn more? Because I know it's all about education.
I deal with all type of, on the business side, I deal with all type of entities, LLCs, corporations, but I want to talk specifically about nonprofits. Just because we give back to a lot of nonprofits with our Liberty Bank Foundation, and as we know, nonprofits it's hard work. The main thing that I see with dealing with nonprofits is it associates and aligns with Liberty Bank, and that's really again giving back to the community. Obviously, all nonprofits do all type of different things, but ultimately it's about community when I'm dealing with nonprofits. So again, it just associates and aligns with what our goals are at Liberty Bank, and that's why I really work closely with our Liberty Bank Foundation to help fund certain programs that nonprofits may be hosting that they need funding for. But that's a lot of what I do, Mary, is help nonprofits with whatever programs they may have doing. I serve on nonprofit boards, but ultimately it's because it's about the community.
I think that's great. And certainly there's a significant need, especially I think with some of the challenging economic times that have experienced. And I've seen you out in the community, and that's really why I wanted to point that out, because you are an amazing individual that
Thank you.
takes your role so seriously. And I see, again, in the time I've known you, you're out there, you're talking to people, you're trying to help, you're trying to be part of boards that really need a great financial mind, but also you can help steer in a direction that would be helpful to help those organizations not only sustain themselves, but actually grow.
Correct.
And so, again, I commend you wholeheartedly and the organization that you work for, that they see this as part of the culture that they want to develop to attract and keep individuals like yourself working in their organization. So again, kudos to you.
You said it best. It's all about the culture.
Yeah, I do. I agree. Even where I work at Nassau, we have an amazing culture of giving back, getting involved in the community. And for me, it's been it supports exactly kind of what I'm all about. So it's really wonderful. I'd love to hear a little bit from you about some tips that you can leave our listeners with. As someone in the banking industry that, again, deals with individuals and families, what are some tips that you can share that are immediate tips and maybe, a little bit later on in the new year that individuals can take advantage of?
Yeah, and I talked, gave examples about it in our discussion, but kind of just to reiterate going down, remembering that, of course, savings matters, but start saving, keep saving, stick to your goals, your retirement needs. Everyone's different. Contribute to your employer's retirement savings plan. I would say a lot of corporations and businesses don't so much now as they used to, but learn about your employer's pension plan if they offer it. I talked about a little bit about considering basic investment principles, not touching your retirement savings, out of sight, out of mind. Put your money into an individual retirement account if you haven't already. And again, you mentioned it, Mary, this is kind of perfect timing going into the new year, and find out about your Social Security benefits.
Yeah, I think that's great advice because as you said, and you can go right to the Social Security site and you can do a lot of research on your own. And, you can perhaps call and speak to individuals and they will definitely give you the information. Sometimes you're on hold for a while, but I do hear that from consumers that, they call and they really want to understand. And the thing that I'll share is there are times where I'm at cocktail parties and I hear people, it's hard not to. And sometimes people, they don't do it to be, not nice people, but they will spread some disinformation about Social Security, about retirement savings. And so I try to keep myself somewhat in check, but it does sometimes scare me a little bit because again, I think you should go to your trusted advisor, do your research online, like you've shared with our audience, and I really appreciate that. So as we're kind of winding down a little bit, I love that you shared a little bit about your dad and your family situation. And again, you're well known in the community, you love what you do, but our question to all of our guests is this. You could do anything that you want. You're very educated, intelligent, you're a go-getter. Why do you choose to do what you do every day? What's your why?
I love the fact that I play a part in, again, going back to individuals, families, and small businesses, that I'm playing a part in both their short-term and long-term goals. And I can give a bunch of examples in my over 16 years of banking to where things that come to fruition. And for example, I've had people come to me crying in a good way, thanking me. And that just goes back to, helping the community in general. I do a lot of things outside of work in the community as well. So this really just complements what I'm passionate about.
I love that. And I think when individuals come to you and it's obviously tears of joy, that's much better than the other. But I can guess that also individuals come to you and they look to you to try to help them solve some of their financial challenges or just dreams or goals. And you're there to do that because, again, they know, like, and trust you and they see you out in the community. It's been a great conversation. I think we just scratched the surface of what we can talk about. And I think you've made some great points. So if individuals want to get a hold of you, Stephen, what's the best way? We will put everything in the show notes.
Yes, definitely. I appreciate that. I do have a work cell, so I know when that phone rings, it's specifically for work. That is 860-661-2453. And again, that phone rings, I know it's work, so I'm picking it up. And then my work email as well is staylor, STAYLOR, @liberty.
Well, I love that I hope you don't mind, I'm going to call you old school a little bit, that you said when the phone rings, I pick it up. I just love that. And I really hope that for others, even if it is a little bit old school, I think it's amazing. So Stephen, thank you so much for spending time with me today and Joseph on the Prime Life podcast.
Thanks for having me.
Thank you. And to all our listeners, keep listening to us, give us suggestions, follow us, share us with your friends and family. And we look forward to another episode of the Prime Life podcast. Thank you so much.
Remember to subscribe to the Prime Life podcast anywhere you find podcasts. You can find all of our episodes, contact information, and more on our website, primelifepodcast.com. Stay connected with us. Follow us on LinkedIn, Instagram, Facebook, and TikTok.